Well, I would say ICICI Bank has posted a fairly decent performance in a tough environment. They have reported limited stress on asset quality in an environment which has seen good amount of impact on account of the COVID second wave. Firstly, in terms of the profits, it's jumped 78% YOY at 4,600 crore. We were working with a number of 4,500 crore. Net interest income growth has been healthy at 18%. They have managed to improve the net interest margins to 3.89% versus the 3.84% in the previous quarter. The fee income growth is fairly strong at 53%. Their core operating performance has been healthy, with the core operating profits growing at 23%. And yes, they have reported limited stress on their asset quality. Their slippages have risen to 7,200 crore versus the 5,500 crore in the previous quarter, and most of the stress on the slippages front is coming on account of the retail slippages, which stands at 6,700 crore. The rest of the slippages come from corporate and SME book, which is at 458 crore. The recovery stood at 3,600 crore, write-offs at 1,589 crore. The BB and below rated book has seen a fairly limited rise of 13,900 odd versus a 13,000 crore as of March. They have written back 1050 crore worth of COVID related provisions during this quarter, and they have improved the provision cover slightly to 78%. They do have one of the best in class provision coverage ratio within the large banks, and they have built good amount of provision related COVID related buffers. In fact, COVID-19 related provisions stand at 6,400 crore. On the loan book front also, they have grown the book at nearly around 20%, with retail book itself growing at a stronger pace at 20%. Their deposit book has grown at 15%, and they have improved their average CASA deposit ratio to 43.7%. The cost of deposits, in fact, have fallen far below the 4% mark. The share of retail book has been consistently improving versus an HDFC bank. So their retail book share now stands at 61% versus the corporate book share of 24%. Management at the press conference did state that they are fairly confident in terms of the book that in terms of the quality of the book that they have. And also their approach is towards a risk calibrated growth. They do expect that the corporate book is likely to behave slightly better during this time, and there were certain NPAs that did get added towards the BB book, but overall they're fairly comfortable with the quality of the book. They also stated that in a response to the question on the builder book, they did state that they are not staying away from any particular segment. They are looking at each of the segment and each of the individual borrowers as well. So yes, a fairly decent number in a tough environment, I would say. Clearly, ICICI Bank has outperformed an HDFC Bank during this quarter results.